Hello to everybody, the FutureTrend channel is again with you, and we're starting our analysis of major currencies. Today is the 30th of April 2018. What we'd like to make first of all during our analysis of today. We'd like to summarize the development in the foreign exchange market during the previous trading week, and to conclude some kind of details and probably to make a kind of some fresh prospects for the coming week. First of all, we'd like to say that of course the United States dollar was very strong over the course of previous trading week. It was mostly associated with rising yields of United States government papers. As you know, the benchmark yield of 10-year United States treasuries exceeded the level of 3%. Now it's trading around 296, 297. Anyway, it's just a kind of consolidation or correction because of the overbought conditions of both of the United States currency and United States treasury yields. All in all, the situation during the coming week will be dictated, as we suggest, by incoming economic numbers in the United States or in other developed countries. And also, of course, the number one event of this week will be the Fed's interest rate meeting scheduled for 1st and 2nd May. Anyway, we suggest that probably the United States dollar could hold its current phase of bullishness. Probably we enter a kind of consolidation period, because from the point of view of normalization of monetary policies from other central banks around the world, this kind of process is still intact despite of the weaker economic numbers and weaker tone of other central bankers in the developed countries. Of course, we need to concentrate your attention selectively from one pair to another. What do we mean by that? Probably it's a little bit complicated, but now we should to concentrate on your attention. We should to concentrate our attention on incoming data from depending from one country to another. And here we suggest that probably this week will be not so good for the United States currency, both from the point of view that the market is not expecting any kind of interest rate rise from the Fed during the week. Also, we suggest that probably the payrolls report that's scheduled for the end of the week could be a little bit negative for the United States economy and for the United States dollar. Anyway, let's see how the situation will evolve from one day to another. And today, as you can see, the euro dollar made a kind of good rebound from the lows of previous week. Euro dollar, which is at 121.36 right now, start to erode its immediate downside downtrend located around 121.40, and subsequent break above this level, as well as form a lower threshold around 121.55, could stimulate further growth in the currency. That's why we suggest that we will buy possible return above 121.55, starting with a small position in the euro dollar. And probably in case of another deep low, we will add to our position around 120.20, where is a moving average 200 daily line, which is located today around 120.10. Also 120, don't forget, it's a kind of psychological level for the euro dollar right now. So we expect a kind of consolidation correction during the course of this week, and we will not be surprised if we see the euro dollar back to 123, 124 during the course of the week. of course, now we are speaking about technicals, we are speaking about technical point of view. As regarding the dollar yen, the strength of United States dollar against the Japanese yen was stimulated over the course of past 2 weeks, both from different factors. Such of them was beginning of another fiscal year in Japan. Also here was a kind of stimulating factor, the acquisition of by Takeda, Japanese company, acquisition of UK company Shire for the amount of $64 billion. You can imagine that to make such a deal, a portion of this deal should be converted. I mean, the funds should be converted from Japanese currency into British currency. That means probably why the British currency was so stable during during the beginning of previous trading day. Ahead of now we are speaking the situation before UK weaker economic reports. I mean the reports of previous trading day, when we've seen a kind of rather dismal economic data in the form of lower inflation, consumer price index, and as well as a gross domestic product released on Friday. That stimulated another plump in the price of the pound. Right now, as we can see, the cable at 37.623, and near it it's approached its longer term uptrend line located around 137.10. Also here around 137.10 is registered the lows of 2018, and all in all that kind of level should represent a kind of rather strong support from a first point of view. Anyway, trend is your friend. That's why we don't advise you to rush into new long position in the currency. Of course, from a longer term perspective, the cable still looking rather positive. Anyway, here probably it's time to wait a little bit before getting into another long position in the currency. Probably we need some kind of supportive words from the part of UK central bankers, or probably we need another portion. I mean, not another, but we need a portion of solid UK economic numbers. And finally, some words about the dollar Swiss, which is very well supported, is looking very well supported right now, because it broke above its longer term 2017-2018 downtrend. It broke above its 200 moving average daily line, which located at 96.64. But anyway, we still suggest that this kind of pay is ripe for a correction, and probably during the course of this week we could see such kind of correction, probably closer to this kind of uptrend line located around 96.55, which for sure should give you an opportunity to buy the pair. At the moment, that's all. Some later we will come with our analysis of euro crosses. Bye bye for now.